Hi, and welcome back to the Business Career College video series. Again, this is Jason Watt, and in this particular video, we're going to look at the trust. And we're just going to look at a brief introduction to the trust. There's a lot more that we can potentially know about the trust, and we're going to look in some later videos at the application of these trusts. If you're going through a financial planning course, this is very important information. For those going through maybe the life insurance course or to a lesser extent the mutual funds course, this is good general information, but it's not the whole range of information. And of course, this does get into a little bit of legal and tax principles, and if you're looking for legal and accounting advice, of course, you should go out and seek the advice of a qualified professional. So, a trust is basically just a way of owning property. And all we're going to do here is we're going to separate out the different ownership structures here. We're going to separate the legal ownership of property from the beneficial ownership of property. So the legal owner is the person who would have title to that property. For example, if we're talking about land, the person whose name is actually associated with the ownership of that property, whereas the beneficial ownership of property is where we have the right to enjoy the use of that property, the right to use it or the right to enjoy its use. And this is also incidentally where the tax consequences of ownership reside. So one of the better known financial planning instructors in the country, a fellow by the name of Larry Wood, will always say that trust means no trust. And I'm a big fan of this saying. It's a good way to look at this. We're going to use a trust only when there's somebody or some circumstance that we don't trust. If I trust everybody and I'm confident that things are going to just work out the way that they're supposed to work out, then I have no reason to separate the legal and beneficial ownership of a piece of property. I would just give that property straight over to the beneficial owner and let them enjoy both the beneficial use as well as the use of that property in title, the legal ownership of that property. The origin of trust law actually dates back to the days of the Crusades, about 900 years ago or thereabouts, when we would have, especially English knights, setting off to wage war, and they would leave the property that they owned, their domain, whatever it happened to be, in trust. They would leave somebody else to own that property with the understanding that when they came back, they would resume using that property for their own use. So that trustee, that person who took care of the property, was expected to look after it in the best interests of that knight who was going to be away and wouldn't be able to take care of their property. So normally when you see a trust, it's just drawn out as a triangle like this. Normally in an organizational chart, a trust is a triangle and a circle is a person. So we're going to see a few of each here. So I'm going to have the settler of the trust. The settler of the trust is the person who actually establishes the trust. This is the person who's going to set up the trust, and this person is the one who's going to put property into the trust. We have to meet what are called the three certainties here. So we have certainty of intention. So there has to be a clear intention that the settler was going to take care of somebody else. That somebody else is what we call the beneficiary or the beneficiaries of the trust. So we would have these people out here, this beneficiary or beneficiary, that would be taken care of. The fact that we know we're going to take care of them meets the certainty of intention, and the fact that we can identify those beneficiaries means that we have met the certainty of objects. That is, we know who the objects of the trust are, who's going to benefit from this trust. And finally, we have to have some property that would settle into this trust, And that's what we call the certainty of subject matter. That is, we can identify that there is actually something that's been settled into this trust. And now we also have to name, and it doesn't have to be one person. This can be a person, or this can be a corporation, where we're going to have a trustee, somebody to take care of this property. This person, this trustee, and this is a word we've seen previously, has a fiduciary responsibility to the beneficiaries of the trust to some extent. They do have to look out for the best interest of those beneficiaries, but they first and foremost have to meet the conditions of the trust that are established by the settlor. So an example of a trust, and it's easy to understand trusts when we start to look at examples of why they might be applied. So we might have a settlor here who has died. If the settlor is deceased, then we would have what's called a testamentary trust. It would normally be established through the will of the settlor. It doesn't mean that they wrote their will while they were alive. That doesn't actually settle the trust or constitute the trust. They would have written their will, and then when they died, the trust is created. That's a testamentary trust. And they put some piece of property. Let's say, how about the family cottage, into this trust. And they want their kids, maybe the reason they did this is because they didn't want their kids to squabble over the ownership of this cottage. So they say, my kids are the beneficiaries of this trust, and there's no reason why you wouldn't maybe bring some grandkids in here. It doesn't hurt. In most cases, this would be the wise thing to do. Maybe even your kids or the spouses of your kids. So there's all kinds of people that you could put in here. So we have these people now. So basically what we're saying is that these people can enjoy the beneficial use of this property. And now we're going to name a trustee. And maybe what you do here is you would have two of the kids that you trust most, but you would say they still can't settle that property out to themselves. They have to look out for all of these beneficiaries. So put some restrictions in here. Basically, you're forcing them to take care of this property and not act in their own best interest, but act in the best interests of all of the beneficiaries. And probably what you would want to do with a trust like this, probably put a little bit of cash in here so that we can cover the maintenance costs of the cottage as well, because otherwise you might create some dissent later on when it's time to put a new dock in or something like that. So that's a fairly basic trust. And there are other rules. We're going to talk about taxation of a trust elsewhere. One thing I will mention here is there is typically a limit to how long a trust can exist, but it's very, very long actually. The trust generally can stick around for up to the end of what we call the last life in being, so the last beneficiary's death. And depending on the province you're in, this rule is something like the last beneficiary's death plus typically another 20 years. So this could be a century-long arrangement, probably long enough for these kids to work out whatever problems they have and figure out something else to do with that cottage anyways. Now, one more thing I should mention, since I have it up on the board here, is that if my settlor is alive when this trust is settled, then we're going to have what we call an inter vivos trust. And that inter vivos trust just means settlor's alive. Even if the settlor sets up a trust today, that's definitely an inter vivos trust while they're alive. They die a year later, the trust still is an inter vivos trust. It still retains that character that it was established while the settlor was alive. So that's a very basic way of looking at trusts. And again, just keep in mind that the biggest thing to consider here is that it's a separation of legal and beneficial ownership. We will look at taxation of trusts later on. We'll look at trust law in a little bit more detail later on. But for now, we recognize that the trust creates this separation here, and it should eliminate a trust problem or reduce a trust problem. I hope that helps. I hope you enjoy your ongoing studies, and thank you very kindly.